Hello everybody, my name is Anthony Dolezal with XG Trading. Today we're going to talk about trading tops and bottoms in a strategy that's going to help you be more successful doing so than you have in the past. Okay everybody, now let's get our house cleaning out of the way really quickly, make the regulators happy. Today's webinar is intended for educational purposes only and is not intended as a solicitation to buy or sell any investment instrument. There's considerable risk involved in trading. Hopefully you know that, and if not, you will learn that quickly. But with that, let's move forward. Today, as I mentioned, we're talking about trading tops and bottoms. Now, here's what you've probably heard about trying to pick tops and pick bottoms from things you've read on the internet or videos you've watched. Don't try to catch a falling knife. I'm sure you've all heard that one. Trading opposite the trend is like trying to stop a freight train. Don't think you're smarter than the markets and that the big players will hunt your stop and then the market will reverse the way you thought it was going to go. Don't get me wrong, there's definitely some validity to these ideas or phrases. However, finding tops and finding bottoms gives a very good opportunity to make great profit. You just have to be a little bit more conservative and patient and wait for the right entry in order to do it correctly. Now, let's look at the keys for actually successfully trading tops and bottoms. Like I just said, be patient. Wait for your setup. Wait for confirmation that the market's reversing, and we'll go into that with some charts in a sec. Get into the trade at the right time. Timing is everything. And if the market goes against you, don't refuse to acknowledge that you're wrong and let the trade become a huge loss. That's one of the major parts that really harm new traders, is letting losers run and cutting winners short. You don't want to do that, especially in this situation. If you're picking a top or picking a bottom, don't move your stop when it breaks, because if you're wrong and it breaks, it could run very, very far. And hand in hand with that, you want to manage your trade effectively and stick to your strategy. Now, here's the important question. How do I do that? Normally, in looking at tops and bottoms, I'm sure you've all seen a chart formation that's called a triple top or a triple bottom. And what you're looking at on the screen right here is an example of a triple top. Now, based on this picture, it's saying each time, by the third time it hits that top, when it comes down and breaks lower, sell it, and then that baby's going to run down and you'll make plenty of money. But how many times have you tried to do this and then the market just goes screaming upward after faking you out and you lose money? My way is it's safer for getting in. Now, what we want to do is wait for 3 successive higher highs or lower lows. Then, when the price breaks through relative support, resistance, or a trend line, that's where you enter the trade. And here's why this works. At key market levels, you're going to see stops accumulate above and below the major support and resistance areas, the trend lines. And the large orders in the market are going to look to use those stops as liquidity to reverse the market and get better prices for their entries. So as each higher high or lower low gets rejected, the likelihood of the reversal happening increases. Now, the last part, trend followers get trapped at that point on the reversal, thinking that the trend's going to continue, so they have to exit their positions with stops, which is going to accelerate the reversal. Now, let's take a moment. We can look at a few examples. This is a chart of the Australian dollar future from a Australian data release. I believe it was an interest rate announcement. So you can see it's got that long wick down and that big candle going up, but I have a trend line drawn there, and it hits one time, two times, three times. After it hits that third time, you can see the market shoots back down pretty quickly and a good amount. That's about a 50 tick move in less than an hour. That's a great opportunity to be able to go in and make money if you see it the right way. Here's a chart of the S&P 500, the E-mini. Once again, it comes shooting down, finds some buyers on the first one, comes back down to a second new low, goes back up, and now the third one, you can see it really rocket ship out of there after that third touch as it breaks through the resistance. Here's a chart for all you energy people out there of crude oil. You can see again the trend line at the bottom. Crude goes down 1, 2, 3, the third touch, and it rocket ships out of there. That move is, let's see, it went from about 56.45 up to 56.95 in 45 minutes. It's 50 ticks. Obviously crude oil can move fast, but if you catch part of that, that's a really good trade. Here's our last example, and it's for you gold bugs. You see gold runs up, makes its first high, then a new high, the second one. Here's your third one, and there it rocket ships down. That is a big move for gold. And the reason why this strategy is so good is because you're not just guessing that you're at good resistance or you're at good support. You're actually seeing the market run into stops, get rejected, come back down, and try it 3 times before breaking out. There's obviously a good amount of specific details that go into this, but from a basic standpoint, it's a rule of 3. First touch, second touch, third touch, watch it break that support and resistance, and jump on board and get on that trade. So if you want to learn more about my trading strategy and our company, please go to our website, which is xg-trading.com. Again, that's xg-trading.com, and you'll find a whole wealth of information that'll help you out. Well, thank you again for your time. My name is Anthony Dolezal. We're XG Trading, and stay green.